Right, hi everyone. Welcome to today's webinar brought to you by IC Markets, where we'll be covering the live analysis session. All right, as a question. Hi, Bastian. Yes, sorry. Yeah, but I can cover pound yen as well today. All right, just take note. I'll be taking over from Peggy for today's session. All right, before we start, let's go through the disclaimer. Yeah, so please take note, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, so my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, before we dive into the charts and trading view, let's take a quick look at the economic calendar and see what's lined up this week. Right, it's actually quite a pretty heavy calendar, but we'll just focus on what's coming up out of the US, which is basically the US employment reports. We've got ADP report on Wednesday, along with Joel's job openings, as well as the highly anticipated non-farm payrolls on Friday. In sandwich in between these two employment reports, we've also got the FOMC meeting. The FOMC meeting is going to run from 30th of April and it concludes on 1st of May, where the press statement will be released, and it will be followed by Chairman Jerome Powell's press conference as well. So in all, it's going to be a very volatile second half of the trading week, right? So this is the calendar from Forex Factory. Take note, I'm on GMT time over here, right? So as you can see, we've got a pretty full week of macroeconomic data. We've got retail sales out of the US. We've got preliminary CPI data out of Germany as well today. We've got manufacturing and non-manufacturing PMI reports out of China, flash CPI results out of Europe as well, and of course on Wednesday at 12:15 p.m. GMT, we've got the ADP employment report, followed by the Joel's job openings at 2 p.m. And also at the same time, we also have manufacturing PMI report by the ISM. And of course, at 6 p.m., the FOMC statement is going to be released, followed by Chairman Jerome Powell's press conference at 6:30 p.m. GMT time. And of course, on Friday, we have the highly anticipated non-farm payrolls. That's going to drop at 12:30 p.m. GMT, followed by the services PMI by the ISM later on at 2 p.m. So we can see this is a very heavy calendar, and especially for the second half of the trading week, it's certainly going to be fireworks, right? We can expect a lot more volatility in currency markets and the broader financial markets going into the second half of this week. All right, so take note of that. Okay, so although inflation is relatively sticky in the US, right? As we've seen over the last 3 months, CPI and PPI data has been persistently sticky, and we're also seeing a potential re-acceleration on a monthly basis as well for the respective inflation metrics, right? So, however, the Fed is definitely not going to raise interest rates at this meeting, right? Come 1st May, they are very likely going to keep rates on hold, and they may adopt a more hawkish outlook with regards to future monetary policy, right? Remember, at the beginning of the year, markets were pricing in about 7 rate cuts for this year. However, seeing how sticky and persistent inflation has been in the first quarter of 2024, this anticipation of 7 rate cuts has now, I think, if I'm not mistaken, been reduced to 3, and it's quite likely going to occur in the second half of this year. So with rate cuts being pushed back, demand for the dollar has returned, and we've seen the dollar index and bond yields surge pretty high this year as well. So of course, the Fed is definitely not going to raise interest rates, nor are they going to cut interest rates come 1st May, but they're very likely to adopt a very hawkish outlook in their press statement and in the uh, FOMC statement, as well as the press conference by Chairman Powell. So take note, all markets participants will be keeping a close ear on what he has to say during his press conference, and that is definitely going to drive significant demand for the dollar on Wednesday. Right. Okay. So now, so with that, let's move on to the charts and trading view. We'll start the analysis on the dollar index, and also there's a request by Bastian as well on for the pound yen. So we'll get to that once we cover the dollar index. All right. And of course, should you have any other requests for any other currency pairs, commodities, or the indices, do let me know in the live chat box, and I'll be more than happy to go through the analysis with you. All right. Okay. Now let's get started. Right, here we are on the chart for the dollar index. I'm currently on the daily time frame. So as you can see here, the dollar index rebounded strongly last Friday. This was primarily due to a relatively hot PCE price index data. Remember, the PCE price index is another inflation metric, and this metric is actually the Federal Reserve's preferred measure of inflation. So on a monthly basis, we saw PCE, headline PCE and core PCE come in line with the estimates. However, when we look at the annualized readings, both headline and core PCE were accelerating. Right, so once again, we see sticky and persistent inflation in the US, which is not going to go away anytime soon. So that means the Fed is very likely to keep rates at 5.5% for an extended period of time. All right, okay, so of course, dollar index rebounded strongly last Friday, hitting a high of 106.18. However, you can see it is actually pulling back quite sharply today, right? So we do have the pullback in the dollar. Now, with this is quite likely we could see the dollar continue to pull back in the first half of this week. However, come Wednesday, Thursday, and Friday, where we have ADP report being released, followed by the FOMC, and then finally the non-farm payrolls, right? If we see a set of employment reports by the ADP and the BLS that highlights strong employment growth in the US, that's quite likely going to create strong demand for the dollar, so we could see the return of the dollar bulls in the second half of the week. And also, of course, the FOMC press statement and press conference is going to likely create further, or is going to likely to function as additional catalyst for the dollar as well. So take note, the dollar could pull back in the first half of the week. However, in the second half, especially if employment data comes trends to the upside, right, is quite likely going to fuel demand for the dollar, and we may see the dollar index reverse perhaps around 105.50 and continue to resume its uptrend should we see a strong set of employment reports coming up later on. All right. All right. Thanks everyone for joining in again. Once again. All right. Okay. So we can see that last Friday's high was at 106.18. Right now, so if I look at where the current resistance is going to be for the dollar index, that's going to be at 106.40, right? We can see previously price running into resistance here at about on 16th of April, right? So I'm going to use this level here to identify my first resistance. Just to give you guys an idea of where the second resistance lies, right? We can see back in October and November of 2023, the dollar index making a double top, right? Coming as high as 107.15 on in early October, as well as again in early November. And when we look at the market structure, this looks very clearly signals to us, points out to us as a significant swing high resistance here, right? So very clearly this is a major resistance zone, which is where the second resistance is likely to reside. So should we see dollar index reverse in the second half of the week and perhaps even break above the current first resistance, the second resistance is likely to come in at around 107, right? So this is where the second resistance for the dollar index resides at. Okay, so we can see previously last week on Thursday and Friday, the dollar index finding pretty decent support at around 105.57, right? This may not be the strongest support level, hence I would just like to identify it as an intermediate support. Where I do see strong support for dollar index is this overlap level here at 105.02, and we can see previously back in November of 2023, as price was falling down sharply over a period of 2 days, it found support here at 105 on 6th of November to retrace higher before finally breaking lower. Then again we can see twice the dollar index has made a significant swing high resistance, first on 14th of February and then the second time on the 2nd of April as well. So we have two swing high resistance here as well, starts creating a very significant overlap level. Now, of course, with price trading above it, this overlap could now potentially function as a major support. So that's why we're going to identify the first support level for the dollar index. Right, and just should dollar index continue to slide lower, let's say we get poor employment report out of the US this week, which potentially could drive the dollar index lower, and should it break below the first support, then where could we identify the next potential support? Right, I do see a pretty decent level over here as well, right? This is another pretty decent overlap level at around 104.14. Previously, you can see dollar index running into a little bit of resistance here on 29th of April, no, sorry, 29th of February, And then of course, as it broke higher, it found support on 26th and 27th of March, and then again on 4th April till the 9th of April as well, finding decent pullback support here before bouncing higher. So quite clearly, this is a pretty significant overlap level, which we are going to use to identify as the second support. Right, what about Fibonacci retracements? I believe we could use a couple of retracements as well. All right, hi Ajay. Yes, of course. Yeah, we're currently covering the DXY. So yeah, so we've started with that already. There's also a request for pound yen. So we'll take a look at the pound yen first, and then we'll take a look at dollar franc as well, of course. All right, now with regards to Fibonacci retracement, right, we can start a retracement from here. This swing low on the 8th of March going up to the high of 16 April. We can see that the 61.8% Fibonacci retracement aligns quite well with where the second support has been identified. Perhaps as a 38 that we can use as well. Let me see, there's a 38 and 62. Yes, the 38.2% Fibonacci retracement also aligns very well with the first support, adding as functioning as an additional contributing factor to the significance of this level here. Right, so these are the key levels for the dollar index on the daily time frame, right? So intermediate support at 105.57. This is a pullback that occurred last Thursday and Friday. First major resistance is the pullback resistance here at 106.40. Second resistance is at 107, which is this swing high resistance or double top that occurred on October and November of 2023. Of course, first support here is this overlap level at 105, and second support is another overlap at 104.14. Now, let's zoom down over into the 4-hour time frame and see if we can fine-tune the analysis if necessary. Otherwise, no, I think this is pretty much fine. If anything, I can probably just draw another Fibonacci retracement from here, 9th of April. Going up to the high on the 16th, we can see that the pullback resistance that we had the intermediate resistance that we had identified at 105.57, we can see within this region there also lies the 38.2% Fibonacci retracement. Now, when I look at it here on the 4-hour time frame, I actually see a pretty decent overlap level, right? Previously, the dollar index ran into a little bit of resistance here at 105.52 on 11th of April, after which it proceeded to find strong support here on 25th of April, 26th, and of course earlier today as well. So this highlights to me as a pretty significant overlap support level, and yeah, so just take note 105.52 has been pretty strong here. So the dollar does look pretty weak as we kick off the new trading week. So of course, should we see the dollar index break below this intermediate support, then it's quite likely we're going to see it drift towards the first support. So we do have a potential bearish breakout on hand for the dollar index. So take note, should we see dollar index break underneath 105.52, we could potentially see it drop all the way down towards the first support at 105, which is a good region to identify as a potential take profit. Right, okay, so these are the key levels for the dollar index based on the 4-hour time frame as well. All right, okay, so we had a request for pound yen, so let's take a look at that as well. Right, so let's start on the daily time frame. Right, you can see here. Right, okay, so I'm just keeping on. Okay, first of all, I've run a Fibonacci projection from this low here on 30th December 2022, going up to the high on 23rd November 2023 and ending with the low here on 13th of December. So we're using the projection levels at 61 and 78.6% to help us identify the pivot and the first resistance. Right, so when we zoom in a little bit here, we can see that the pivot is actually when we zoom out and look at the monthly time frame, we can see that the pivot level is actually a pretty significant overlap level that has occurred back in April and July of 2008. So basically, pound yen is trading at 15-year highs, pretty much, or 16-year highs, right? It's a very extended level for pound yen, and this is a significant overlap resistance level, which does look like a place where pound yen has run into resistance, right? So we have the presence of a major overlap resistance at 197.82, as well as a Fibonacci projection to highlight a major resistance zone. Right, so when we look back here, right? I don't see any other significant swing high resistances or pullback resistance or even overlaps. So we're going to use the Fibonacci projection at 78.6% to help us identify a suitable resistance area. So resistance or first resistance has been identified at 204.50, which is a level that's identified by the 78.6% Fibonacci projection. And the pivot point is another major resistance area that has been identified by the overlap resistance at 197.82, as well as the Fibonacci projection at 61.8%. Right, now what about first support? Where could we identify a suitable first support? This might be a little bit tricky, but perhaps what was previously a strong swing high resistance here, which is at 193.74. This could potentially be a strong support level for the pound yen. All right, okay, so now that we've seen how we've identified the pivot and first resistance, let's drop back down to the daily time frame and see if we can fine-tune the analysis if necessary. Right, okay, so no changes, of course, to the pivot and first resistance. I think first support is pretty fine as well, right? I think we probably don't need to go back this far for the first support, right? Actually, when we look at it on the daily time frame, there's a pretty decent overlap level here. Let's just zoom in a little bit so we can see this level clearly, much more clearly, right? We can see pound yen running through a little bit of resistance here on 20th of March at 193.38, after which it broke above it, and we can see today's candle as well. Pound yen dropped as low as 193.66 before bouncing higher, right? So we can see that this is a pretty significant support level for the pound yen, right? I think there's a Fibonacci retracement that we could use as well. All right, let's start the retracement from here. This swing low here on 2nd of Jan, going up to this high. We do most likely it's just going to be the 38%, right? Okay, although it's pretty far from where the overlap level sits. Yeah, so let's not force the retracement there. Let's not force any Fibonacci retracements onto our analysis should it not align well with any of the previously identified support or resistance levels. Let me see if I run a Fibonacci from here. This low on the 1st of February. Okay, we do get maybe a 50% over here and 61. Okay, so once again, we don't really see any Fibonacci levels aligned pretty well. But however, if I were to keep something on, I would probably use this retracement here from the low here on 1st of February, ending with today's high, and I'll just keep the 50% Fibonacci retracement. Right. So we can see here, the Japanese yen has actually declined very significantly in 2024, right? So that means if the yen is declining or becoming weaker, then of course that means currency pairs like the dollar yen and all the yen crosses are climbing high as well, right? So we can see now, although pound yen did spike above 200 earlier today, it then reversed to drop quite sharply. So let's see if we can fine tune the analysis on the 4-hour time frame. Right, so as you can see, as Asian markets opened this morning, right, take note I'm on GMT time here, so that's UTC plus 0. So as Asia markets came online, we saw the pound yen break above 200 briefly before reversing to drop lower. Now we can see it has found support here. So should this bullish momentum still continue, we may have a good opportunity to go long on the pound yen, and where I would place the stop loss would be at a level that's below the first support. So if first support is at 193.38, I will probably place my stop loss at about 15 pips underneath this first support level and probably go long at pound yen at market, and then I'll target the area of the first pivot as a potential resistance zone. So if we go long and pound yen at about 195.30, right, we can target about at least 150 pips target. It's quite a reasonable target, as we see where the pivot is a significant resistance level here. So we've seen the previous 4-hour candle, we've seen the pound yen bounce off the first support, and the current 4-hour candle does look like to show a potential bullish reversal as well, which means that we are quite likely to see this bullish momentum continue. So right, there may be a potential long opportunity for the pound yen. Stop loss should be placed just underneath the first support level here, about 15 pips underneath the first support to give us some breathing space or allowance with regards to the stop loss. And of course, targeting the pivot area at around 197.80 as a potential take profit zone. Right, okay. On the 4-hour time frame, perhaps there's another Fibonacci retracement that we can draw from here, 22nd of April, going up to today's high. It's the 61.8%. Okay, right, we can see that the pound yen today has actually just bounced off the 61.8% Fibonacci retracement. Right, so we do see a potential bullish bounce in play for the pound yen for today. All right, okay. Now we've had a request as well for dollar franc, so let's get to that. All right, so let's look at the dollar franc on the daily time frame first. Right, so back in March, right, I think it was around 21st of March, the Swiss National Bank unexpectedly cut its key policy rate, right? So when the central bank cut its rate, the Swiss franc declined significantly in value. So that, of course, would mean dollar franc is going to rise strongly, which it did, right? So the dollar franc broke above 88.70, right? Previously, this level here at 88.70 was a strong resistance level, right? The dollar franc running the resistance in middle of February and the beginning of March, and when the S&B finally made an unexpected announcement to cut its key policy rate, that sent the dollar franc surging high, right? Since then, it's been in this pretty strong uptrend. However, if you look at how this currency pair has been trading since the 11th of April, it's sort of trading in a sideways range, right? When we look across here, right, this looks like sideways trading with this currency pair approximately ranging between 90.85 and 91.60, right? Of course, we do see this strong wick or this large wick here that occurred on 19th of April, dropping as low as 90.13. However, generally you can see that dollar franc has traded within a range, a relatively narrow range between 90.80 and 91.60, so roughly about an 80 pip range since the 11th of April, so for a period of 2 weeks, right? So it's quite likely we can see today, based on today's candle, daily candle, the dollar franc is pulling back. It's quite likely going to find support around this level again. So quite clearly the first support is at 90.82 for dollar franc, and of course the resistance area is going to be the top of the range, which is at 91.52. So that's where the first resistance and first support levels for the dollar franc lie at. Right, okay, let's see if we run a Fibonacci retracement as well. Okay, let's see from here, this swing high resistance on 3rd of October 2023 down to the swing low on 28th. Is there 78.6% that we could use? Oh no, okay, it's gone well above all the retracement levels. Let's get rid of that. Perhaps there's a Fibonacci retracement that we could use from here, this low here on 8th of March going up to the high. Is there 23 that we could potentially use? Not really. Maybe from here there might be a 38. Let's see. Right, okay, I'll just zoom in a little bit here. Right, so when we run a Fibonacci retracement from this low here on 8th of April going up to the high here on 25th of April, we see that a 38.2% Fibonacci retracement aligns pretty well with the pullback support at 90.82. So let's just keep that on for now. All right, okay, and okay, these are the key. So basically, dollar franc has been ranging sideways, and it's quite likely it's going to continue to do so over the next couple of days as well. So if you are playing the range, right, you'll be looking to buy dollar franc at around the first support, which is going to be around at 90.88, and should price continue to bounce higher, you'll be looking to exit close to the first resistance at about 91.40 to 91.50. Similarly, after price has reacted off the first resistance and starts to drop lower, you'll be looking to short the dollar franc off the first resistance and targeting the first support as a potential take profit zone, right? So this is how we could potentially play the range for dollar franc. Right, now let's go down to the 4-hour time frame and see if we can fine tune the analysis if necessary. We put this here. I think pretty much that's fine. Yeah, dollar franc has, to be honest, has pretty much not done anything since 11th of April. Although that's a good thing, because then it allows us to play the range as well. Remember, when price bounces off the first support, it does help us identify a potential long entry. Similarly, when price reverses off the first resistance and starts to drop, it helps us identify a potential short entry for dollar franc. Right, so these are the key levels for the dollar franc on the 4-hour time frame as well as the daily time frame. All right, okay. Right. If not, then let's cover the euro and pound. Yeah, we'll cover the euro and pound, and then we'll look at some of the commodities as well. We'll look at gold and WTI oil, and of course, should you have any requests, do drop them in the chat box early so we have time to go through the analysis together. Right. Okay, so looking at the euro, right, as you can see here, since 11th of March, the euro is showing a pretty strong downtrend, and we see a series of lower highs and a series of lower lows, right? So this indicates a pretty strong bearish downtrend here, and there's also a descending trend line that we can use, right? There's a pretty decent descending trend line where the euro has bounced off on or run into resistance on 13th of March, 21st of March, and as well as on 9th of April, right? So this is a pretty significant descending trend line. And we can see the euro, running the resistance here last Thursday at about 1.0730. So this looks like to be a pretty significant overlap level, right? We can see previously the euro found strong support at 1.0743 on Monday and Tuesday, 1st and 2nd of April to bounce higher, made a retracement to the upside before reversing at the region of the descending trend line. And after it broke underneath it as it was retracing higher last week, it once again ran into resistance at 1.0743, thus creating an overlap here. So the first resistance for the euro is identified by this overlap level. Right, okay, with regards to the support, you can see very clearly here, back on Tuesday and Wednesday, 16 and 17 April, as the euro was falling sharply in the second week of April, it found strong support at 1.0615, consolidated around this area for a period of 2 days, retraced higher, found support once again on the 19th before finally bouncing higher again. So quite clearly, this is the first major support for the euro. Right, is there Fibonacci retracement that we could use? So yes, I think we can. Right, so let's start the retracement from here. This swing high resistance on the 9th of April, going down to the low here on the 16th. There should be a 50% Fibonacci retracement that aligns well with the overlap that we had previously identified. Right, so this adds further significance to this resistance area. And if I were to pull up the Ichimoku cloud as well, we can also see that the euro is trading underneath the Ichimoku cloud, which itself is an indication of bearish momentum, and of course the cloud is red in color as well, right? So we can see overall the euro is still in a pretty, on a longer term frame, on a longer term outlook, the euro is still in a bearish downturn. However, this retracement to the upside since mid-April has been pretty strong, but remember, this region here at about 1.0740 to 1.0750 is a pretty strong resistance zone for the euro. Right, so should we see this currency pair continue to rise higher, especially to here, it may help us identify a potential short entry. And of course, if you have been long the euro, right, if you have any long euro positions today, right, targeting the first resistance as a suitable take profit zone would be a good idea. Right, okay, so these are the key levels for the euro on the daily time frame. Let's see if there's another retracement I could use from here. Swing high resistance of 8th of March down to the low on 16. Maybe it's a 38% here. Right, okay, so we have 38% Fibonacci retracement and aligns well with the 50%. So we have basically a Fibonacci confluence here. So Fibonacci confluence simply means you have more than one Fibonacci level at a particular price zone, right? So that adds to the significance of this resistance here. All right, okay, let's move on down to the 4-hour time frame. Let's remove the cloud for now. Right, so as you can see here, quite clearly, first resistance is around the region that's bounded by the 38.2% and 50% Fibonacci retracement, as well as this overlap resistance here. Right, I also see a pretty decent intermediate support level for the euro at 1.0680. Right, previously we can see the euro running into resistance here on 18th of April, after which it proceeded to find support on 24th of April, the 25th, 26th, and as well as earlier this morning at today's market open. Right, so this creates a pretty significant overlap level where the euro has bounced off recently. Right, so take note, if you are long the euro, targeting the first resistance or the region of the first resistance is a suitable take profit zone. Right, and conversely, because this is a pretty strong support level, overlap support at 10680, so should you have any long positions, right, your stop loss should be placed at about 10 to 15 pips underneath this overlap support to give us that little bit of breathing space here, right? So you don't want to keep a very wide stop loss, so we're going to use this overlap level to help us identify a suitable stop loss level that could be anywhere between 10 to 15 pips underneath this overlap here. All right. I think we can run one more Fibonacci retracement. This time we'll start from here, 16th of April, going up to the high. We should have the 50% retracement aligned pretty well with that overlap, right? So we can see we have the additional factor of the 50% retracement adding to the significance of this overlap here. All right. So since the dollar index has been pulling back today, so of course that means the euro is quite likely going to climb higher. However, take note, this resistance area between 1.0740 and 1.0750 could prove to be a stalling point for price action, at least for today. Right, okay, so we've done the euro. Let's now take a look at gold, and then we'll look at WTI oil as well. Similarly, when we look at gold on a daily chart, of course, this was the first resistance here, or rather this is the all-time high for gold at $2,431 per ounce, right? Let's see, but most likely this is going to be our first resistance here, right? And with gold edging higher, right, since last Wednesday and Thursday, gold has found decent support around $2,314 per ounce, right? This has found pretty decent support around here. So I'll highlight this level as intermediate support, and it looks like it's going to continue to climb higher. So I do see a potential pivot area level at about 2,387 here. So quite likely we're going to see gold continuing to rise higher today, and where it could run into resistance is potentially around this the region of the pivot, which is at $2,387 per ounce. So if you have any long gold positions, right, a good area to identify the take profit would be around the vicinity of the pivot, which is at 2,387, which is this pullback resistance level. And of course, your stop loss would be placed below this pullback here, or rather in this case just slightly below 2,291, which is the bottom of this wick, right? You need to give yourself a little bit of a breathing space here. Therefore, you don't want to keep a very tight stop loss, otherwise you may get stopped out unnecessarily. Right, so finding a decent area here like the bottom of this wick, probably identifying a level just below the bottom of this wick to identify a take profit level, so stop loss level would be a suitable way to do so. Right, let's see if we can run Fibonacci retracement as well. We start the retracement from here, 14th of February going up to the all-time high. Let's pull up all the fibs. Perhaps we can use the 23 and 38.2%. Okay, no. Gold has already got underneath 33.6%, so this level is no longer valid. 38.2% is simply too far, but it's a level that I think we can use to identify as a first support here. Right, when we look at 38.2% here, right, we can see dollar index, gold finding support here on 3rd of April as well as the 5th of April, forming like a small pullback here before bouncing higher. So this level as well aligns pretty well with the 38.2% Fibonacci retracement. So yeah, this is where I would identify the first support. Right, okay, then let's move on down to the 4-hour time frame. Right, can we fine tune the analysis if necessary? Right, maybe you can run one more Fibonacci retracement starting from here. This high on the 18th of April going down to the low. I believe, is it the 61 or 78.6 that we could use? No, it's the 78.6. Yes, so we can see here, okay, it's not the cleanest level, but generally we can see that since 15th of April, gold ran into resistance from 15th of April till the 18th. So for a period of 3 days, it was this level functioned as a strong resistance. Of course, breaking higher here on 18th and 19th April. However, as it pulled back, it did try to break above once again, but it stalled around 2,392. So this is a pretty decent resistance area to identify as a potential take profit should you have any long positions on gold. All right, okay, there's also a request on dollar yen. Yeah, so let's get to that as well. All right, then we can go to then we'll cover oil afterwards. Yeah. All right, so once again, right, to truly appreciate how strong this move in dollar yen has been. Dollar yen is actually trading at a 30-year high, right? So the last time the dollar yen was trading around 160, it was back in on April of 1990. So dollar yen is trading at a 34-year high, right? You can see previously this was a significant swing high resistance back in March and April of 1990, which is where price does seem to have stalled, right? We can see dollar yen has pulled back from this level here. So quite clearly, this level here at 160.20 is our pivot. Where could I identify a resistance area or resistance level? We can see back here in November of 1986. This was where another resistance had taken place. So this is where I will identify my first resistance for dollar yen. Take note, we're performing the analysis on the monthly basis because quite clearly dollar yen is definitely not at all-time highs, of course, but is trading at a 34-year high. So it's really extended levels for dollar yen here. Right, so you can see this is how we've identified the pivot and the first resistance for dollar yen using the monthly time frame. Now let's zoom back down to the daily time frame and see if we can fine-tune the analysis if necessary. Right, so I'm going to try and see if there's any Fibonacci extensions that we can use. So extension levels are found by running a retracement. So we'll start from here. This high on 13 November 2023 going down to the low on 28 December last year. The key extension levels lie at 127 and 161%. So you can see here, previously dollar yen stalled around or just underneath the Fibonacci extension at 127%, right? From 16th of April till 23rd of April, right? For a period of about 5 trading days, right? So roughly for a period of 5 trading days, dollar yen was kept underneath the 127% Fibonacci extension before finally breaking higher. And as markets opened today as well, it ran into resistance at the swing high resistance at 160.20, which is also a zone or a level that aligns well with the Fibonacci extension at 161%. So quite clearly, this is a major resistance area for dollar yen. And we'll just keep 161%, so we'll get rid of 127. And of course, the first resistance is at 164.50, which is that pullback resistance that occurred in 1986, right? So that's also another milestone for dollar yen. Now, okay, with dollar yen bouncing back, right? Okay, quite clearly, the first major support for dollar yen is at this pullback level here at 151.91. Quite clearly, this is the first major support for dollar yen, right? We can see it running the resistance here on 13th of November. And of course, as I mentioned, it consolidated under 152 for a period of nearly 2 weeks, right? For a period of nearly 2 weeks, dollar yen was just consolidating underneath this level before finally breaking higher. Now, what about support? Maybe there's a pretty decent intermediate support that we can identify at 154.73. Right, previously, okay, let's zoom in a little bit here. Previously, once again, the dollar yen was trading underneath this level or around this level for a period of 5 to 6 trading days before finally breaking higher. Then, as it pulled back sharply today, once again, it does seem to have found support around here and bounced to trade around 155.81. Right, so take note. So should this level give way, right? So if you see dollar yen breaking underneath 154.73 quite cleanly, that is quite likely going to trigger a bearish move all the way down potentially to the first support at 151.91. So there may be a potential bearish breakout for the dollar yen, but especially if this level here doesn't give way, if it doesn't hold up, then it's quite likely we could see dollar yen pull back all the way down towards the first support here. Right, we can also run a Fibonacci retracement starting from here, 8th of March, going up to the high of today. Right, let's pull up all the fibs. Right, we can see that this overlap level at 154.73. You also see a Fibonacci retracement at 38.2% aligned very well. And of course, we see the 61.8% retracement line up perfectly with the first support as well. So let's keep 38 and 61%. Right, so take note, should we see once again the dollar yen break lower, this break underneath the support level, it could potentially trigger a bearish breakout, and where it could find support would be around 151.91, which is a zone that would use to identify as a potential take profit. Alright, let's go down to the 4-hour time frame and see if we can fine-tune the analysis. I think pretty much this should be fine. I think if anything, there's maybe just another retracement that we can run from here, 4th of April, going up to today's high. We do see the 61% here aligned quite close to the overlap that we had identified previously. So let's just keep 61.8% and just highlight this as a zone. Right, pretty strong support zone over here. So strong support zone for dollar yen between 154.40 and 154.98. Yeah, it's a pretty wide range, but we can see so far recent price action has shown that this level has held up. And if it does continue to go higher, we may see a potential opportunity for the dollar yen as well. So if you do decide to go long on the dollar yen as US markets come online, then a suitable area to identify your stop loss level would be just underneath this support zone at 154.73, maybe 10 to 15 pips below the 61.8% Fibonacci retracement. And of course, we can target the region of 158 as a potential take profit zone should we see dollar yen continue to climb higher. All right, okay. So with that, okay, let's move on to oil. Let's move on over to another commodity. This is oil. So XTI USD is the instrument that tracks the WTI crude oil futures. So as you can see, since 2024, at the beginning of for most parts of 2024 this year, we see oil moving higher. We see a series of higher highs and higher lows, indicating to us a pretty strong bullish uptrend as well. Right, there's even an ascending trend line that we can probably draw. This one here as well. This is a pretty decent ascending trend line here. And I think we can draw another one as well over here as well, right? Right, since WTI oil is trading closer to this current ascending trend line, so let's just keep that on. This is probably something in the future that we may need to help us identify a potential support zone. But now quite clearly we can see this ascending trend line is pretty significant, with WTI oil bouncing off this level here on 12th of March and once again last week as well, right? 2 weeks ago and at the beginning of last week, Monday, Tuesday, before going higher. So we can see it's XTI is pulling back today, or was pulling back, and I also see another descending trend line here, right? This is also another descending trend line. So should we see XTI break above this trend line cleanly, then it's quite likely we're going to see a resumption of the bullish upturn as well, right? So you can see a sort of a symmetrical triangle pattern being formed here, right? We can see XTI USD converging into a narrow point here, and it could likely break out to the upside or downside. Okay, that's the thing about symmetrical triangles. You can't really tell which direction it's going to break out in, but it does look like it wants to go to the upside. So take note, if we do see WTI oil break above $84 per barrel, it's quite likely we have another bullish momentum or potential long trade on hand. Right, okay, so first resistance for oil, WTI oil, is going to be this pullback resistance that occurred at the beginning of April, which is at $87.13 per barrel. And the second major resistance is going to be at this swing high resistance that occurred on October of last year. So that's at $90.36 per barrel. right? What about support? Right, quite clearly here, the intersection of the ascending trend line and this pullback level here is a pretty strong support level, and even here as well, 82.58. Right, so I'll identify the first major support for crude oil at $81.38, and I would also like to highlight this intermediate support level here as well at 82.60. Right, okay, I think there's a couple of Fibonacci retracements that we could use. Let's start the first one from here. This swing low on 5th of February going up to the high here on the 5th of April. I think it might be the 38%. Okay, let's see, let's pull it up. Yeah, we do see the 38% retracement aligned very well with the first support, so let's keep that on. There's another retracement that I think we can run as well. This time it'll be from here. I wonder if this is necessary. Maybe it's the 50, I think. Okay, yeah, okay, probably yes. We can see that over here on 19th of April and 22nd of April, price did find support just above the 50% retracement before bouncing higher. Of course, we do see the wicks extending below, but of course you can see generally this has been, when we look at the body of the candle, right, this is a pretty strong support zone for WTI oil. Right, so we may have a potential bullish breakout on hand here, right? We may have a potential bullish breakout. So take note, any long oil positions, right? You should have any long oil positions, you can either use the low of the candle here, the daily candle. You can use the low of the candle to identify a suitable stop loss level. So the low of the candle is at about the low of the day, sorry, is at about $83.43. So perhaps placing the stop loss about 20 cents to 30 cents underneath this level would be a good support zone. Or if you want a slightly wider support, you'll be looking at the first major support zone and identifying a thick stop loss level at around this level or just below it. Of course, the stop loss, the take profit level would be close to where this pullback resistance occurred, which is around at $86.50 per barrel. Alright, so these are the key levels for WTI oil. Let's move on down to the 4-hour time frame. Right, so once again, should you be looking to go long on oil, perhaps looking for a potential bullish breakout, right? We can use the low of today, right? Remember on the daily candle, this is the low at today at $83.43. So identifying the stop loss, maybe about 20 to 30 cents underneath this level would be a suitable place to identify the stop loss level should we see a bullish breakout take place. All right, okay. Right, we do have time for another analysis. All right, do you have any requests for anything else? Right, if there's no further requests for any other analysis, then let me see, what can I cover? Maybe we can cover the indices, right? We've not covered the indices, so let's look at the US 500. All right, okay, so let's move on now to US 500. Let's start the analysis on the weekly time frame. Right, okay, maybe let's start from a fresh page. Right, so you can see here, of course, since October 2023, the US 500 has been in a strong uptrend. However, since the beginning of April, it has corrected quite strongly, falling quite sharply over a period of 3 weeks, but it did find has reversed in mid-April to bounce higher as well. So quite clearly, the all-time high is here at 5,282. First resistance probably for the US 500 is this pullback resistance here. Remember, I'm using the body of the candle here on the weekly time frame. I may adjust this level as we move down. Right, in terms of support, right, with price finding support here at about 4,955 on 15th of April. Right, this is quite likely a pretty decent support level here. It may look a bit more obvious on the daily time frame. Right, we'll get down to it shortly. Okay, we can also run a Fibonacci retracement from this swing low, 23rd of October, going up to the all-time high. Let's pull up all the fibs. Right, we see 23.6%. Okay, that's already gone past, so we don't need that. Maybe we'll just keep 38. Perhaps there's something we can identify on the daily time frame. Right, okay, we can see here, first support is fine. This is a pretty significant overlap level. Price running into This index finding the resistance here on 2nd of April, then after which finding support on 13th and 20th of February, and once again finding support on the 19th as well. Of course, we do see the bottom of the wicks dropping below, but of course you can see generally how 4,954 has functioned as a pretty strong overlap support. Right, first resistance clearly is close to where the all-time high took place, and if I were to identify the second support for US 500, it would be this pullback that occurred on 31st of January, right? It's a pullback level that also we can see that the 38.2% Fibonacci retracement aligned very well with this pullback. Now, what about the next resistance level, right? Let's say we see a very strong rebound in equity markets over the next couple of weeks, and we see US 500 break above the all-time high. Where could we identify the next resistance, right? We can try and use Fibonacci projection. Let's start the projection from here, 13th of March to July 2023 to here. Let's see, or maybe, wait, hang on. Wait. Projection, I need this. Starting here to, okay, we've already seen 100% move up. Okay, might be an extension. Let's see, might be an extension, and we can try and find. Remember, key extension levels lie at 127, 161. Okay, so quite clearly, US 500 has gone past 127, so we can't really use that. Maybe we could use the extension at 161% to identify a potential second resistance level, but of course that's simply quite far from where it is trading. Maybe we can try and identify something a little bit more closer. Right, I think in that case we would need to use the retrace extension level on this part of the move here. So starting from here, the all-time high, going down to last week's low. Right, we can probably use 127% as the first resistance here. Remember, price is trading, or was trade. This is the all-time high for US 500. There's nothing else that we can reference in the past. So we're going to use a Fibonacci extension to help us identify the next potential resistance area. Right, so should we see equity markets rebound strongly, and if we see US 500 break past the first resistance going above its all-time high, then quite likely the next resistance is going to come in at around 5,381. Right, there may be an intermediate resistance as well. Right, if I were to look here, let me see, I think there's a 61.8% Fibonacci retracement that we could use. Yep, there's a 61% here. Why am I going to use that? You can see here that previously US 500 found pretty decent support on 3rd of April all the way till 11th of April, bouncing off this level several times. So previously this level was functioning as a pullback support. Now, of course, with price breaking underneath it and starting to rise up, this level could now potentially be an intermediate resistance, which also aligns very well with the 61.8% Fibonacci retracement. So take note, this is going to be a critical area for US 500. If it can break above this level cleanly, then quite likely we're going to see it make a move all the way up to the all-time high. However, if we do see US 500 being rejected around this level, it may help us identify a potential short entry. So should we see US 500 reverse from 5,150 and start to drop lower, that may help us identify a potential short entry on the US 500, and we can use the first support at 4,954 or 5,000, right, between 4,954 and 5,000 to help us identify a suitable take profit zone for any potential short US 500 trade. Alright, okay, so this is what I have for US 500. Maybe on the 4-hour time frame, anything else that we can identify? No, probably not. I think this is pretty fine. Right, okay. Right, as we come towards the end of today's session, is there anything else that you would like me to cover? Right, are there any other currency pairs or commodities or indices that you'd like me to go through? Alright, if not, then we'll just wrap up the session by looking at the key economic events for this week. Right, take note, right, so it's a pretty heavy calendar lined up, but do look out for the second half of the week where we've got ADP employment report, JOLTS job openings, ISM manufacturing PMI, and of course the FOMC press statement and the press conference by Chairman Jerome Powell. And we wrap up the week with non-farm payrolls on Friday as well. So it's a very heavy macroeconomic calendar where we could see a lot of potential catalysts for currency markets as well as commodities. And of course, if we do see a set of strong employment reports by the ADP and the BLS, which reports on non-farm payrolls, and if we also see a very hawkish outlook by Chairman Jerome Powell, all these things are going to create a strong or potentially create a strong bullish catalyst for the dollar. So that means dollar index is likely to resume its uptrend, and of course that means currency pairs like the euro, pound, Aussie, and Kiwi are likely to fall, and it could also potentially drive gold prices or or pull back gold prices as well. All right, so this is what we have for today. All right, so before we end, here's the final disclaimer. All right, thanks everyone for tuning in to today's live session. Do look out for all upcoming webinars by IC Markets for the rest of the week. I wish you all the best in your trading journey, and I'll catch you all at the next webinar. All right, thank you everyone.